Hello traders, today we are going to look for analysis for volatility 101s. So as usual, we need to start from the highest time frame, and basically I will start from I need to start from the monthly range, because I know that the monthly the previous month is already finished or complete. So when you go to the daily time frame, this period separator shows us that the monthly range. So this is 1 month, this is another month, it is another month. So this month we are here, March. So February, the range of February is from this period separator to here. So the high of the month of the February was here, and the low of the month of the February was here, this level here. So as we can see, the general view of this setup in this daily time frame, it shows us the market need to reverse. So if the market need to reverse, I need to capture this low here. Basically that's why I needed to understand what they did to this level here. So after I finish to identify the high and the low of the previous month, then I go to another lower time frame, H4, and here in the daily time frame, here at daily time frame, you see this, this is falling wedge, this is falling wedge. So basically the market maybe needs to reverse, but we need confirmation also. So after knowing that information, the market is showing us this reversal pattern, and also the market is failing to break this key level here, the low of the month of the previous month. So I will go to H4 time frame. When you are in H4 time frame, you get the weekly range. So each period separate is 1 week, 1 week, 1 week, 1 week. So still the previous week, which is the last week for the last month, this one. So what market did here, it shows us they failed also to break the previous week. They break it, but it was a funky breakout. Then they came to close above this level. So there is high probability that the market will shoot up to here. That will be the first target, and when they break it, this trend line, and retest it, we will go all the way up to this level. So after identifying this information from high time frame, what market want to do, what market want to do, so we are going to lower time frame to find the entry. So the entry, you can find the entry at any time frame, H1 or below H1. So here I will go up to 5 minutes. to 5 minutes. So when I come to 5 minutes here, I see these levels 1, 2. So that's why I put this trend line here. So after putting this trend line, so I want the market to go to push above this trend line, and when they come to retest, I will buy. When they came to retest, and after getting the confirmation, I will buy. And when you buy here, your stop loss should be below this level, below this buffer zone between these two black line. So you need to calculate your risk. At the end of the day, you must put your stop loss at least below this level, because they can push, they can break this trend line, they can retest it, but they can push maybe up to somewhere, and then they will come down to retest again this level, this buffer zone maybe, and then they will go up, because this trend line is very minor zone. So you need to put your stop loss below this level. If you will, you can also put below these two levels here, but at least you need to put below this buffer zone. Don't put stop loss inside this buffer zone, because these are the strong zone at the higher time frame, so the market can also come back to just this zone. So don't put your stop loss in this zone. You need to put at least below this zone, so somewhere here or here. So you need to, at the end of the day, when you get the information, you need to the confirmation, you need also to follow the risk management. So you need to calculate your risk. So this is analysis for volatility 101S. The overall direction will be to the upside.